What an absolute insane week in the markets. Let's get started. We're going to be breaking down my market outlook for this week. It's an end of an era as well. Warren Buffett has stepped down from Berkshire Hathaway, so a tribute goes out to Warren. But let's get into the markets and talk about exactly what's going to be happening. Just 7 days ago, fears were rampant, tariffs were rife. What happened 7 days ago? That's all it was. And now we've got an insane market rally. The S&P just notched its biggest winning streak in 2 decades. The FTSE is hitting record highs daily, and it's had its winning streak for 15 days in a row. So is the rally real, or is this just going to be a trap? Let's turn our focus to this week, because we have got a big week that can really affect the markets. We've got the Fed and we've got the Bank of England this week, and I'm going to be breaking down exactly how I'm trading this. The Fed is on Wednesday, Bank of England on Thursday. It is going to bring a big reflection point of whether or not this rally will continue or completely reverse. Let's talk about what my plays are on indices, oil, VIX, gold. Let's break it all down. Plus my tribute to the Oracle himself, Warren Buffett. Thank you so much for what you've done over the last 60 years. So let's quickly recap that whiplash from last week. Last week was a masterclass in psychology. Blimey, it had people quitting the markets from not knowing what they're doing. But the fear premium has vanished. But why? Why did it vanish? A Goldilocks US jobs report. Strong enough for resilience, weak enough to keep the Fed hikes off the table. Powell also delivered a balanced message, keeping fears away from the markets, and overall this caused a rocket to fuel them, aka risk-on explosion. S&P blasted past 5,680, the FTSE near 8,600 after 15 straight green days. But let's look closer. The gold pullback has happened from 3,500 all the way down to 3,230. The VIX has collapsed below 23. Oil has stayed below $60 a barrel. These divergences matter to what my trading strategy is going to be this week. It tells me that conviction isn't universal and complacency might just be creeping in. And that is a mix for disaster just before the FOMC meeting this week. Don't get caught sleeping. Now, just before we get into my game plan for this week, we have to mark a truly historic moment. Warren Buffett, the Oracle of Omaha, is stepping down as CEO of Berkshire Hathaway at the year end. Think about this, it's a legacy, transforming a failing textile mill into a global powerhouse through sheer investing genius and unwavering principles. Value investing, economic moats, compounding, patience, and integrity. He didn't just make shareholders rich, he taught generations how to invest wisely. And I'm sure all of you can relate to watching his content in some way, shape, or form. 60 years at the helm. Again, big thank you and tribute goes out to Warren Buffett. Thank you so much for everything that you've done for this sector and for all of the traders that are watching my channel. Okay, so this week the focus is going to be on the FOMC on Wednesday and the exact tone of the message. For the Fed, no rate changes expected. It's all about Powell's language. Does he validate the market's relief rally? Does he keep future cuts on the table, or even for 2026? Does he bring this up or not? Or does sticky inflation force him to sound more hawkish than expected? Are there going to be potentially any hints at hikes returning? It is unlikely, but if so, this could scare the markets. Or a strong pushback against easing hopes could kill this rally instantly. He needs to thread the needle perfectly and stick to data. And then completely on the flip side, for the Bank of England, this could be huge for the UK. Bailey's been hinting at cutting rates, and it looks like we could see a 0.25 cut as well on Thursday. If they signal cuts are coming soon, or potentially they might do a cut there and then, and it is expected. If they do the cut, expect the pound against the US dollar to fall, and expect the FTSE rally, guess what, to continue rallying. But if they hold firm because they're worried about inflation, sterling could spike, potentially capping the FTSE's incredible run. And this is a big divergence here in comparison to the Fed in the USA. Completely on the opposite end here. So let's talk strategy. How do we trade this? Remember, respect momentum but demand confirmation. Trade the levels, manage the risk. I'm going to be breaking down how I take advantage of this. And here is the key play that I'm watching. Ultimately, I'm going to be sticking with momentum unless I see otherwise. I'm going to be buying dips on the S&P 500 intraday levels, 5 and 15 minute charts, maybe using cluster signals. I'm also going to be looking at the FTSE 100 to continue its momentum and continue this rally. Why? Because the cuts do look likely from the BOE, and I anticipate that we'll see a weaker pound, which will ultimately fuel the FTSE higher. So buying those FTSE 100 dips on the 5, 15 minute, even hourly, if we do get those types of pullbacks into that buy side there. Opportunity 2, gold. Gold has come off of that 3,500 level all the way back down to 3,200. Could this be time to buy the dip? That's the big question here. It is sitting around that key support level of 3,200. Will it hold or will it break? I think this is a good level to buy into this, with stops below $3,200 around that 190 level. However, this is all going to be powered by what happens in that FOMC meeting. Genuinely, I believe long-term gold is going up. It just matters whether or not we're catching a falling knife or whether or not the support is actually going to hold. And a break below that $3,190 level means that there will be a further fall, and that play will be off the cards until we see a slowdown. So the stops will be below $3,190. If it falls beyond that level, then it means that we are potentially catching a falling knife. And that means that the move is going to continue, and we'll have to wait for consolidation before we get into that long to the upside. We know institutions are wanting this to finish quite high this year, around that $3,600, $3,700. So having these sort of big pullbacks could be a very good long-term to mid-term play for us. However, the Fed's tone is going to be critical here. Now, when we look at oil is not doing so well, trading below that $59 and sitting below that $60 resistance level. This doesn't mean that it's not of interest. I do think we could have some short-term bearish moves to the downside. However, I think this is a perfect time to be loading up on oil stocks. I'm not going to name the stocks that I'm looking at because I think that, you know, it's down to you, but you could be looking at BP, you could be looking at Shell. These are great dividend stocks, and overall I think these could be mid to long-term good plays. Oil doesn't sit well at this level for those businesses, and I do think that we'll see this start to lift. Now, when we look at opportunity 4, the VIX, the volatility index, I love trading this on Wild DFX. It's great on there for futures. Now, my opinion of this is very important. I think that when we have the Fed talking, if depending on what he's saying, if it's anything potentially damaging to the markets, and we see the S&P sell off, we could see VIX futures spike. I expect this to be temporarily, and I don't expect this to be mid-term to even long-term. So what I'll be looking to do is to take short positions into that if we see a VIX rally. So keep that one in mind as well, because it could be a great way to trade the volatility. Opportunity 5, let's talk Forex. Pound dollar is going to be potentially in play this week with the Bank of England. Do we have a dovish BOE? Because if we see that rate cut, we could see a breakdown in pricing here on the pound against the US dollar. This is ever so important, especially to be trading on the midterm. So be looking at sort of 15-minute time frames, shorting into rallies, as we do potentially see that rate cut coming this week. Now, the euro is completely different. Euro against the US dollar is going to be Fed driven. Do we have a dovish Fed, a break above that 1.1350 level, targeting potentially 1.14, or do we have a hawkish Fed, a break below the 1.1250 with targets at 1180? Now, the US dollar against the Japanese yen has come into focus because obviously the yen has been seen as a safe haven during all of this tariff nightmare. But with that easing and the Bank of Japan sitting on their hands not doing anything, this really does weigh heavily on US factors. So do we have a dovish Fed, potentially risk on? If so, targets of 144. If we have a hawkish Fed, potentially risk off, we could see a retest of that 146 level. It is possible. Trade the breaks after the announcements. So there you have it. An incredible rally meets critical bank tests. What is going to happen? This Wednesday, this Thursday are going to be super important for your overall trading strategy. Trade the levels and manage your risks like a professional, and be patient, just like what Warren Buffett would say. Be ready to act to whatever Bailey and Powell is saying. We have the strategies, we have the plays ready. Let's see how these markets are going to pan out this week. If you've enjoyed my market breakdown of what I'll be watching this week, then make sure we hit that like, hit that subscribe, and get in the comments. I reply to every single comment. I'm keen to know what you're watching this week and what you'll be trading. Best of luck in the markets, everybody, and stay tuned. We are definitely going to be releasing a documentary on the famous trader Bill Ackman and how he built his fortune. So stay tuned for that and let me know what you think.